and I'm going to walk you through the WSI indicator system. Most traders lose money, and it's almost never because they aren't working hard. It's because they're guessing, or they don't know how, or they don't have a strategy, or maybe they're just gambling, or they saw someone online making money and thinking it's just a press of a button, and bang, you're rich. Newsflash, it doesn't really work like that. Well, today we're going to go through an in-depth of an indicator that has consistently beaten the market. This indicator is built to fix, well, your management and no more guessing and no more gambling. What you're looking at on the screen right now is the Whitestone Capital WSI system, version 12.3. So 123 other versions came before it. It was built over years of studying how institutions actually move price, market structure, liquidity, order flow, and risk. So usually people see a green candle and they buy, or they see a breakout and they chase it. They hold a losing trade because they have no idea what the market is actually doing. This system doesn't just draw lines on a chart, it calculates a real-time conviction score, scans for 8 high probability setups, and it manages your stop and targets automatically, and it tells you exactly how many contracts to take. In this video, I'm going to walk you through every single thing on this chart, what it is, what it means, how it calculates, and how you can actually use it to trade for yourself. Before we zoom into any one piece, we have to look at the big picture. The system runs on 6 core engines. One, a multiple time frame bias engine reading 5-minute, 15-minute, 1 hour, and 4 hour at once. 2, conviction scoring a 136-point model on every bar. 3, the strategy bar of 8 setups. 4, automatic risk management. 5, active trade management. And 6, a live volume profile that hides the point of control and the high and low volume zones. Now, let's break each one of these down one at a time. The first thing on your eye should go, or to go to every time when you load your indicator, is the dashboard panel in the top right corner, your command center. The header confirms the build. Below it, your current position, flat, long, or short, lighting green or red with the strategy that fired. Then the session row, the conviction scores, bull on the left, bear on the right. Each a percentage with a grade. Green means tradable, gray means leave it alone, and underneath a multi-timeframe row. The single highest weighted factor. Then your reference levels, previous day high, VWAP, EMA, condition, structure, point of control, supply and demand, OTE, RSI, and ATR. Now the brain of the whole system, the conviction score. The model has a maximum of 136 points. On every bar, it tests a long list of true and false conditions, each adding a specific number of points. It adds everything up, divides by 136, and churns it into a percentage. That percentage becomes your grade. 95% or higher is an S, genuinely rare. 85 to 94 is an A-, 75 to 84, AA, 65 to 74, a B+. The default minimum grade below that, you don't trade it. So what earns points? The heavy hitters on the bullish side. EMA stacked 21 over 50 over 200 is 10 points. Price above VWAP 8. A bullish market structure direction is 10. Price and the discount half of that range is 8. A liquidity sweep up or sitting at the OTE zone 7 is each. And the biggest of all, multi-timeframe alignment to the upside, a full 15 points. The bearish model is the exact mirror, so you can see a bull score of 75 and a bear of 80. That isn't a coin flip. It isn't clear. It's clear, it's weighted, quantified, red on direction. Now, everything you actually see draw on your chart because every element has a job. The EMA cloud, 21, 50, and 200. Your trend backbone, the cloud turns green in an uptrend, red in the downtrend. VWAP, the volume weighted average price, institutes anchor to green above, red below. The previous day high, low as flat sets step lines. Structure management's price run into reverses. Fair value gaps, 3 candle imbalancements, the market comes back to fill, and the order blocks, labeled supply and demand. At the last swing high and low, the footprints of institutional grade orders. You'll also see BOS and CHOCH labels. BOS stands for break of structure. It is price continuing its trend. CHOCH is change of character. It is early warning that the trend may be reversing, so just keep an eye out on it. The gold box is the OTE zone, the optimal trade entry sweep spot between the 61.8 and 78.6% retracement. On the right edge, the volume profile, the highest volume level is the point of control in gold. High volume nodes where price stalls, low volume nodes where it rips through, plus the session boxes for Asia, London, and New York. And the dash liquidity lines are where the stops are sitting. Now, the heart of the system, the 8 trade strategies. Everyone only fires when your conviction score is already high enough. 1. The SFP, a swing failure, where price pokes a high but the body closes back below, trapping the breakout. 2. The fair value gap entry. Tapped a fresh gap that formed right after a break of structure entry at the midpoint. 3. The VWAP reclaim. A strong, decisive candle back through VWAP for divergence. Price makes a lower low with RSI makes a higher low at the key level. 5. The liquidity sweep. A spike through a pool of stops that immediately reverse back inside. 6 is manip, the manipulation sweep. This is going to be the one that you see the most often, and it is very selective. A sweep of major level on average volume, then structure breaking in the reversal direction, then conversion behind it. This is the smart money trap. It catches the real move after institutions shake everyone out. 7 is phantom, the most demanding setup. The 1 hour time frame bias your way, a sweep of longer term high or low structure breaking, and a pull into a fair value gap or order block with a confirming candle. And 8 is fibble. Price inside the OTE zone sitting right on the high volume support level, the structural line, the textbook institutional entry. A signal fires and passes the grade. The next thing the system does is figure out your position size. Not a fixed lot, it measures entry to stop in points, converts to ticks and then dollars per contract, divides the dollar risk you set by that number, rounds down and clamps between your limits. Entry at 7511 with a stop of 7497, a 14-point stop, and about $700 per risk per contract. With $225 of risk, you can take one contract at $2,500, or you can take 3. You can never accidentally risk more than the amount you actually set, and you can program this within the indicator. Where does the stop go? Every strategy places at a logical structural invalidation point. The sweep strategies just past the sweep wick, the fair value gap past the edge of the gap, VWAP just past VWAP, divergence past the structural low. Only when none exist does it fall back to ATR. For targets, the system finds the nearest real structure level about your entry for the first target and the next level beyond for the second, anchored to where the market actually reacts, with a minimum reward built in, and where a daily loss limit hit your maximum and the system shuts off new signals, protecting against revenge trading. Once you're in a trade, the system manages it on every bar. 6 things at once. Break even, your stop auto moves to entry, so the worst case becomes a scratch. The trailing stop ratchets up behind the structure as a trade runs. Dynamic target extensions push your second target further when the momentum shows up. The soft warning turns the stop zone amber if structure starts to turn against you early. The emergency exit pulls you out immediately if the reversal confirms. And the end of the day close flattens any open when the New York session ends. There's also a flip. If a much stronger opposite signal appears, it can also add reverse, meaning that the trade that you may have been in a short switches to a long. Now the results. Because the logic only matters if it performs. Everything here comes from TradingView Strategy Tester on the S&P 500 futures. 5-minute chart over a full year, March 2025 to March 2026. Over the year, 350 trades. A win rate of 61%, roughly 3 out of every 5 trades in profit. A profit factor of 0.59 for every dollar lost, about $1.60 made. and a net result of positive 3.41% on a $1 million basis. But here's the number that matters the most. The drawdown. The maximum equity drawdown over the entire year was just about 9%. 0.9%. So you're earning a roughly $3.75 in profit for every single dollar or drawdown you have to sit through. That ratio, return versus drawdown, is what separates a strategy you can actually trade from one that just looks good on paper. Breaking it down by direction, both sides were profitable. The long trades won about 66% of the time, the shorts about 57%. But the shorts actually brought a slightly more total profit. With a higher profit factor, that balance matters. A lot of strategies only work in one direction. This one works in both ways. I want to be straight about the context. The Sharpe ratio here is modest, completely normal for a intra 5-day strategy because trading that frequently produces a choppier liquidity curve than a long-term system. The Sortona trade, which only looks at downside, is noticeably higher, telling you the loss management is doing its job. And the honest disclaimer, these numbers come from a specific instrument, time frame, and risk settings. Change any of those and your results will change. Backtest performance is never promise of any future results. So how do you actually trade with this? Before the session, read the dashboard. Check the multi-timeframe alignment to set your bias. Note that where the previous day high and low are point of control sits at the New York Open. Watch how price reacts to the overnight Asia levels. When a signal fires, read the label, strategy, grade, percentage, entry size, and dollar risk. B- or better, match your bias in session that your green light. Then follow the panel. Stop in red, targets in green. When the first target hits your stop, moves to break even on its own. After that, stay out of the system's way. Let me be clear about one thing. This indicator is not a magical button. Nothing in trading it really is. What it actually is a complete structured framework for making decisions in a market where almost everyone else is running on emotion or just guessing. It tells you when conditions are right, what size to take, and where to get out if you're wrong, and it manages the trade for you as it plays out. The same kind of structure edge institutions trade with is a package you can actually use. A great example of a live trade. So here we get signaled for longs, and all we have to do is follow exactly what it says. So we're risking 1, we are on the ES, so we're just going to switch to a 1 contract, and we're going to press buy. That clicking sound means that we're in. We want to move our stop down, and obviously we can go ahead and increase the risk if we want to. So let's say I want to go in with, let's say I'm more comfortable with 5. Let's go ahead and buy. I'm risking $150, and here we have our TP2. So the risk to reward isn't the optimal level, but we have our stop loss where the position becomes invalidated. So now we're going to go ahead and trim more than 50% of the position at TP1. Press a sell, and we see on the 15-minute, we just kind of consolidate within this OTE zone, and then we do go into drawdown, and we see a very nice spike up, and we just get wicked for TP1, and then we can move our stop back to break even after hitting TP1, just like it says, stop loss to break even. So now risk-free trade, and we end up hitting full TP, and we get a signal for TP2 hit. These are all, you can set up alerts for when this trade fires, or when TP1 or TP2, or when emergency exit, or when break even is signaled. All of these kind of bubbles can be put so you can have them as alerted. Also, this is on the 15-minute time frame. To me, this is the most successful when it comes to trading. Over here, we see end of day close. We get signal to get in, and we see TP1 get hit. End of day happens, and then we eventually hit break even. and then we hit TB2 after. If you've got questions or you want me to break down a specific strategy in more detail, or you want me to see how these setups looked on real historic data, drop a comment and let me know. And if this breakout helped you, I really appreciate the support. This is Whitestone Capital. Trade with structure, trade with conviction, and I'll see you in the next one.